The rupee weakened to its lowest level in 13 months on Tuesday as markets in the region tumbled after a sharp rate hike in Russia. With me down the line to discuss this and the Indian economy further is BBVA's senior economist. Sumedh, while intraday the currency can recoup some of its losses on the back of dollar sales by exporters, the weakness in most global currencies will continue to weigh on the rupee. But just how low can it go?
If you see the weakness in the rupee, we find that it's not unique in the sense that the currency weakness for India is also reflected for other currencies in other emerging markets. But looking ahead, we believe that the rupee may not weaken as much as we had seen last year in a broad-based, the rupee sell-off. That's primarily because the RBI has done well to contain, a lot of external vulnerability indicators, external vulnerability factors for India. We see that the current account has substantially improved. The fiscal deficit has improved and has much more space for improvement. And also thanks to the fall in oil prices, the inflation is now much under control. So we don't think that, it can go much lower from here.
The developments came after data on Monday showed India's trade deficit widened to an 18th-month high in November. Now, despite expressing concern, the government reiterated commitment to enhancing trade engagement by diversifying to markets in Africa, ASEAN and Latin America. Is this a short-term pain for longer-term gain, and will it pay off?
I think, the government's efforts to diversify exports basket would definitely have a long-term positive impact. But what it needs to focus on is the composition of the exports. Because India's exports are still low value, more of a raw material. It needs to move up the value chain and, into exporting more machinery and, into a higher value kind of exports. And for that, India needs to focus on, the rigid labor laws that it has. It needs to make them more flexible. It needs to create a more conducive environment for foreign investors to invest in India's manufacturing sector. So it's not going to be a very short-term kind of a positive impact. It's going to be a long-term process for India to develop its export strength to that extent.
Indeed, India's economy may be staring at deflation. This is according to analysts after wholesale price inflation rate turning zero in November. Do you believe the data, coupled with commodity tailwinds, opens up space for monetary policy to support growth?
First and foremost, I don't think that India, it's a severely supply-constrained economy. And there is a lot of latent demand to be tapped in India. So in that perspective, India is not going to see a deflationary path, in the foreseeable future. Having said that, the recent disinflationary trend, as you put it, has been certainly beyond RBI's expectations. Certainly, they had priced in, inflation moderating, but the trend has been, accentuated by the falling oil prices, which no one had predicted. To that extent, RBI has kind of opened doors for the possibility of rate cut early next month. Having said that, they still remain cautious of, inflation, particularly because, the monsoons next year can surprise on the downside, and therefore, you have a fuel price shock as we have seen in the previous years. Ourselves, we are anticipating, RBI to cut rates by 25 basis points, either at the next policy on Feb 2nd, or, even before that, if the December inflation data, which comes out mid-Jan, surprises positively. But we think that, the RBI will continue to remain cautious of inflation going ahead into next year.
Sumedh, thank you so much for your time. Well, that's all from me for the moment, but also today we have Press Review, Industry Catch-Up and Commodities Corner, so please do keep clicking back to the website. Goodbye for now.